Hi, Maddie here. Today we're going to be talking about investing, and I want to be sharing a few of my tips that I've learned along the way. So I want to share 4 freaking things with y'all. I want to talk about some pillow talk about some studs, some sexy guys, and making sure that your routine is consistent with your investing approach, and then freaking purge that other shit. So yeah, those are the 4 things. The first one, pillow talk. Cash is not your best friend in most environments, especially not this environment. Something alternative besides cash, unless we're in a deflationary cycle, is not going to be very helpful for you. So really, if you're sitting on a nice chunk of change, you should be thinking about where you should be putting that cash to make it work. The bank offers nothing. Inflation drives it down. So think about alternatives. The one caveat to that is if we get into deflationary spin. So yes, think about how you're treating your cash and make sure that it's really balanced. Which brings me to the second one, which is studs. Yes, we all love the sexy companies, the Googles, the Apples, the Facebooks. I mean, these are just gorgeous companies. They've recreated the industry, but let me tell you something. These companies can turn into disasters overnight. You have all these entrants coming in, and this one stud is somewhat of a stud. And there still could be very much long-term potential, but from an investing perspective, make sure to diversify. Think about which industries you're in. ETFs are fantastic for the casual investor, focusing on deciding that you want to pick up like a Tesla or a Bitcoin or some of these Zoom meetings. I mean, you may have done really well, and that's freaking wonderful. Be very cautious with that long term. But being diversified doesn't mean just buying energy, buying financials, buying utilities. It means the US, international, fixed income, equities. So getting a real balance. Now that you've diversified, fantastic. Now the next thing is setting up those habits, like your skincare routine, where you're doing it on a daily basis. So it doesn't take much, but putting money aside for yourself and changing some of those habits that you have really add up to a lot over time. So really thinking about what is your routine for investing for your financial health. So again, consistency. And then the last thing, which I think is probably the most important thing right now, is take a mind check and ask yourself, what information is impacting my decisions on a daily basis? And the number one answer is your phone. Your phone, you open it up, the first thing you do is you scroll through and boom, there it is. It's the highlights on the market. It's because these are habit-based systems. I mean, think of how Robinhood wants you to engage with their platform. They want you to come to it. They share the information of what stocks are doing well and not. And without having a core fundamental basis behind that, you get sucked into that loop, that habit loop. So, and that's what they want. The news cycles want you to do. Think about which apps you can purge that are really consuming your time on a daily basis, because you're not winning, those apps are winning. And those are like the 4 things, is make sure that you have a nice balance of cash that can get you through a nice runway, but the rest of it should be diversified, and you should be contributing to that consistently if all possible. And then purge the things that are driving habits and information that is inconsistent or erratic, that can make you make really bad decisions in an event that things come down. And this is the first one that I'm sharing of this type. So like, what comes to mind for you? What do you want to learn about? What do you think would be helpful? I want to make this valuable to you and share the information that I have.